At the end of last week, there were rumors that the leaders of the Group of Seven were planning to tighten sanctions on Russian energy, which exerted some pressure on oil prices. However, such measures could lead to even more supply chain bottlenecks, with the situation in the energy market getting far worse. The initial reaction is more like panic, given that the G7 officials are set to discuss a fresh sanctions package during the 19 and 21 May meetings. Market participants will remain cautious throughout the week, although some new rumors may well stir up investors, causing price spikes. Much will depend on the nature of a possible news. Given Brent crude oil futures ended last week on a down note, there is a high likelihood of a continued decline. From a technical point of view, the quote may drop below the level of $70 per barrel. However, if the downside momentum fizzles out and the quote returns above the $76 mark, the market will move into a new bullish cycle. After a slight recovery followed by a steep drop, gold is now trying to stabilize above $2,000 per troy ounce, and the 2,000 mark acts as a support, which has twice led to a rebound since early May. Apparently, to go below this level, the price needs some grave reasons which are not yet available. At the same time, there are no strong driving forces that could support the yellow metals, so consolidation at current levels looks quite logical. A lot can change after leaders of the Group of Seven rich democracies decide on a new sanctions package against Russia. Until then, gold is likely to trade sideways. Now let's move on the ruble. After a quite pre-launched and large-scale rally, the market has finally started to trim imbalances, and the ruble is gradually losing value. At the same time, traders are still waiting for some comments from the Ministry of Finance, but it remains silent. This means that the agency will probably continue its interventions aimed at weakening the exchange rate of the national currency, and the only question is the scale of these interventions. An additional risk factor is the rumors about a new package of sanctions, and thus the most likely scenario for this week is that the Russian currency will extend weakness. The dollar-ruble pair found support at around 75 rubles, which contributed to a gradual increase in the volume of long positions. If this trend persists, the quotes are expected to rise above the level of 80 rubles per dollar. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.